Welcome to the blog for Monday the 27th of August. This is day 56 of 65 of the Compound Effect Challenge. So this week and next week to go as far as just a specific focus on doing the little things right every day, day in, day out. And the idea is just to be making forward progress every day, applying my engine method and just really sticking with the little things. And it's about being mechanical and systematic and just having that process locked in and just very much a habit and almost to the stage where you're on autopilot, and that's where you can have confidence that you're taking the same area time and time again. That's then when you can really start to go ahead and build risk models and business management programs around your system, because once it becomes systematic and habitual, that's a great place to trade from, as opposed to being sort of very discretional and entering in different spots all the time, and then you can't sort of apply that situation where you're taking the same area over and over again. So that's what it's all about, becoming systematic. And this is just a little challenge I set for myself to make sure I'm doing that every single day. Trading plan. So today, over the three strategies, and really when I think about these strategies, it's for me, it's about identifying major movements in the market. I want to cover most major movements in the market, whether that's a trend, a continuation of a trend, whether it's breaking through the highs or the lows and then getting continuation through there, or whether it's all of a sudden getting a bounce off the lows or the highs and coming back within the range. So that would be mean reversion. So any sort of major movements want to have some opportunity to get in, not always getting in just because of missed orders and think, well, no fills and things like that. But that's the way I set up for myself, and that's the way I want to trade. And if there's sort of a 4, 5, 6 point movement, I want to give myself a chance at, through price action, being able to get in on that. And certainly today, even though it was a slower day, and being a Monday of August too tends to be a bit slower, but I found myself with looking at plenty of opportunities. Not all of them became trades, but certainly I looked at all three of the strategies today, because all three of those areas became available. So here it is here. Overall for the day, 2 losses and a break-even trade. And then there was 1, 2, just looking at these arrows here, 1, 2, 3, 4 other trading opportunities. So 4 areas that I looked at, whether they just didn't come off, whether there was no fill, or just whether they just didn't quite get to the full place of being a trade. And then there was 3 actual trades as well. And of course, got the blue dotted lines in here, so they're key areas in the marketplace that I'm looking at as far as the continuation strategy, looking for the market to react to those levels mid-range. Then you've got the breakout box here, which will draw around the pre-market. So I had it drawn around this area here. So this was an interesting one. It was sort of one I was contemplating having it up around here, or as opposed to then the market really sort of shifted. We're hanging around here, and this is where I originally had it. Coming in, sitting in, looking at the market half an hour beforehand. Obviously, this is quite a nice little swing low here. We're hanging above it, but then also the market pushed through it. So I want to have it here. Then just before we opened, the market really shoved down again. So I actually dropped the breakdown box right down here, which really starts to reduce the amount of opportunities up here. Certainly like it up here. And what I saw up here is the market push, come back to that level originally that I looked at, 14.1250, and then go. And as far as breaking this little bit of point here, so if I hadn't got it up here, not that I was looking at this area because I dropped the breakdown box, but just going over it for my own sake, if I don't get the order there, what I've set up for myself is so I can get in on a stop order, meaning having it below the market so I can then push through and get collected and not miss out on any opportunity, as long as it's within 6 ticks of the area I'm trying to get in. So this is this region right here. So what happens is the market push down, come back up, possibly trying to get in there, probably no fill there, but as it comes down, if it's pushing through this point here and the other markets are supporting it, then really getting on board. For me, there was an opportunity there just because the breakout box in the end, I actually ended up dropping it. So what I needed to see is it push through, then come back, and that's why I got the arrow there. It needed to come back to this line and sell, which it never did do. But as far as this area here, coming down and breaking through this point here, you know, I'm always keen to see what other markets are doing, and all the markets. So I want to show the example of Russell here. So here's the same bottom of this line here. By the time I was looking at the ES as I was breaking through this equivalent point, so ES is sitting up here, the Russell's already well and truly through. Same was with the Dow Jones, and the Nasdaq was the same as the ES, just sitting right there. So they're all there, but the Russell and the Dow Jones well and truly broken. So I wasn't able to get on the trade just because I changed the breakout box. But just a classic example, happens time and time again, of where other markets, if they're just pushing through with some real momentum, then they're just going to get it's a great way to get an indication of this direction. And that was certainly the case today in the market, just pushed down for a good 3 or 4 points. But you know, as far as the Pacific opportunity and the line I decided to go with, it was a bit lower, so no actual trade entry there. From there we got down here, we started really dealing sideways, so the market's obviously going to either do two things. It's going to either push down lower or break out, or come back and mean reversion, come back within the range. Actually, I've missed, I should have put a little, I was looking at sort of a breakout trade down here as well. So just add in the extra arrow there. So looking both ways as a setup, as whether we could potentially break down further or come back within the range, and really watching the other markets, because with these two type of strategies, where I get the information or the sort of deciding factor as to which way it's going to go is really watching other markets, and in this case neither was actually triggered based on the other markets. Looking at the breakout first, that was the first area I was looking at. Here it is here, here's the 1 minute chart, so it's really dealing around this 1408.50 price. So what I need to see the market is push through it with some power, come back, use as resistance, and then go lower. So here's the setup here. This is the blueprint of the setup, but what I was missing was other market support. If you go through and have a look at the other markets, so here's the Russell, where was it? It was up through here, so it got quite a bit of a retracement when the ES went just sideways here. The Russell actually got quite a bit of a bounce in it through this area here, and all the other markets were the same thing. None of them were really putting any pressure on the lows, and none of them looked like they wanted to break down lower. So then also, you know, the flip side of that is if you consider predictive average crosses down here, and I'm looking at a potential breakout trade. You know, if all that kind of selling area fails, an area where they could potentially go lower, fails, and they start breaking up through this area here. So you imagine just a little pivot across there, and then all the other markets breaking through their power. Then I look for the reversal, and again this one here, as the market was breaking, so here it is here, if you imagine, drawing a line, here's the top of the pivot. So basically I'm looking at this candle here, and this candle here was stopping right at that pivot. All the other markets in this particular case, every single one of them, not one of them actually broke, they're all right there, but my rule with other market support, again I'll try to make it as black and white as possible, is I need at least one market breaking through, and I've got this line marked on all the charts as I'm watching it live. I need at least one of them, and they all sat right there, right underneath it. And of course it was the next one where they all broke, all four of them simultaneously with a lot of power. You know, if it comes back and tests that area, I'm prepared to get on there, but you can see it just broke and it never came back. But normally, I mean, it's quite rare if it's going to go like that, and that's why I place the emphasis on the other markets. At least one of them, the Nasdaq or the Russell, would normally pop its head through. It was quite bizarre. Rarely is there a real mean reversion situation like this where the other markets just don't break. So when they just weren't breaking like that, just believe that maybe the pressure was going to hold it. Maybe it was going to look to come back, and at least before going up, come back and maybe have a look at this sort of price action or these lows again, then have a second go and give me an opportunity to get on, but not the case today. But that, you know, just an example of price action. You know, as in both trades, the breakout trade and the reversal trade, I'm looking at Pacific price, so the pivot breaking up higher, and then a price action through this range here as far as going lower, and then coupling with that is what the other markets are doing, and just no setups in that particular situation there. From here, when eventually, obviously it's the reversal that was the area that worked. The markets just really held off, and eventually they did really push up and pushed up really strongly. Came up to this next predetermined level of 14.13. So what I'm looking for is the markets to push through, come back and bounce off it. Now I see this as not a breakout trade because I do take into account pre-market if it's relevant. This particular one, there's quite a decent high here, not long before the cash market opens, so I do take this as the high of the day. So when I'm looking for this market, I'm seeing this as 1, 2, 3 points from the high still. So for that reason, I'm prepared to look at my mid-range strategy of the continuation or momentum, and not at this stage look at the breakout. So it's still basing off this key level here. So look for the market to push through, come back and bounce off the key level. You can see the actual 5-minute fade was triggered exactly on that level there. For me, I actually took it 2 ticks lower because what was happening is when I look at these key levels here, most of the time I go with them, but if price action is slightly different, maybe a couple of ticks tick off, I will change where I believe the actual price is. And for me, going back here, seeing how this market really bounced quite nicely off 12.50 and reacted to 12.50 right around the opening as well. For me, I believe that the market was just had more eyes for 12.50 rather than 14.13. So I leave the 14.13 line there for the rest of the setups, but for this particular one, I'm dealing around 14.12.50 and had the order on there. So as this fade come through and it was triggered, I'm sitting down here waiting 14.12.50. Got filled in there. The market's gone 5 ticks exactly, so I did look to get out 5, what I call 1R, so whatever I risk, 5 ticks, I look to get that out with a third of my contracts. So unfortunately, even though I went 5 ticks, wasn't able to get the actual contracts out. They didn't fill. I did reduce, so when the market did head off like this, if there's a very obvious pivot point forming here, that if the market comes down and breaks that, I don't want to be a part of it, so I could really reduce the stop and just have a 2-tick stop. And it's also my reversal strategy too. If something like this where it's a strong buying area, if it doesn't go on with it and it starts breaking through here and breaking this pivot and all the other markets are doing it, like I was talking about down low, that's my reversal setup. And it's the one setup. I know it's in this particular situation, it's taking a trade after a loss, straight after a previous loss, but it's the one area I allow in my trading plan for the market to for myself to take a trade straight after a loss, even though rarely, you can see here 2 losses in a row in quick concession, so you want to try and avoid that because that's hard on the mindset. But going back through the months, it barely does it happen. Normally when a good area like this, I believe that this momentum trade was a great one. It had a great chance of holding and going higher. If it fails and push through like this, rarely does the market come back. It just normally keeps on going. You can see overall the actual market did go down. It really was kind of a turning point in the market, unfortunately, but it's just popped up enough to stop me out before going lower. So I guess overall the area was solid, just the actual entry got stopped out, and I'd actually reduced the stop by a tick anyway, so I was sitting there at 4 ticks, so 4 tick stop out in this particular area just to show you the reversal. So here's the pivot here. Sorry, here it is here. So this is the Russell. So what happens as I was looking to, as it's looking to break, so I'm looking at the ES coming down and breaking this pivot, and this is the Russell. The Russell's actually right down here somewhere, so you can see there's a classic example, and all the marks right there all through. So classic example of market support. They'd already clearly broken that pivot, so therefore I've got market support. So I'll take the sell order. Another arrow here, so this is what I mean. There was quite a few opportunities for me today. It was quite a congested trading area. Just got to be very careful that things don't overlap and still take solid areas. But again, I've got to look at this area as quite separate. So what this is here, this is my version of 5-minute sell. It might look like a bizarre 5-minute sell, but what I need is overall trend, pull back, push down, a bit like a 5-minute sell. So what I'm seeing is, like I said, I include this pre-market. I see this is the trend staying up here. This is essentially a big pullback. Now the market is, because what we've done was come back to 14.13 and it's reacted. The market's reacted nicely to 14.13. It's got underneath it, come back, use it as resistance to push lower, as long as this moving average is pointing down. If it's not pointing down, then I treat the market action as up, and I keep looking on buy for buy trades. So as far as when I'm dealing with these key levels, I'm placing all the direction on, or which way I'll take the trade, on the direction of the moving average. So momentum, I'm looking for a bounce off the key level. You can see clearly moving average is up. I'm looking for a buy trade here, not a sell trade. If it's pointing up like this, not even considering any sort of sell trade as far as this setup's concerned. Moving on, we're dealing around this price level again. We've pushed through it. It's got my blueprint. Come back, use it as resistance. Moving average now clearly pointing down. Look to sell. This one here at the time I was watching it live, I just in my heart just knew it was an area that's going to work. I really quite like these ones where it comes back quite a way like that. It just looked like there was downward pressure. All the other marks were still well and truly down from this reversal trade here. There was a heap of pressure down. Thought it was it's really high probability of working. Unfortunately for me, it's just I was still within this reversal trade here, and basically as I'm getting out of that, I'm getting an entry for this next trade. So I'm not prepared to take 3 trades in a row, especially after loss. So if I went loss, that could be devastating for the mindset. So reversal, I'll allow my trading plan to take it straight after a previous trade, or even if it's a loss. But continuation, the fact I was getting out of a previous trade meant that doesn't matter how good the setup is, even though it was a good one, I can't take it. So that one I had to leave. So I do record it. I do record it for the purpose of my risk model and records, but it doesn't go down as a winning trade, obviously. Righto, from there, I was very keen on this downside, and obviously I couldn't get it there, but by then, now the market's moved on. What I'm looking at now is directional trade. So this is the same category as mean reversion, as the reversal. So we've had an uptrend here. What I need now is predictive average to cross down, cross up, cross down. So it's like a 5-minute sell sort of based on the predictive average. And as it's coming down and breaking through a pivot, so this is the new pivot point here. So I'll show you on the 1-minute chart. So this is it here. So what the market's come down, come back up. So what I'm looking for, the predictive average is cross down and look for using this again as a pivot on all the other markets. So I've drawn it here. Here it is here on the Russell. Okay, so what I need to see is all the markets right there at that equivalent pivot, and at least one of them breaking through. So this particular case, this is the equivalent candle here. So you can see the Russell's just breaking through. The Nasdaq looking the same as right there, but it was the Dow Jones that really confirmed the entry. It had well and truly broken through and was sitting right down through that pivot and clearly broken it before the ES had. So for that reason, entry, and actually take it right on the pivot there at 14.11.75. So this particular one here, again it went 7 ticks, popped back, wouldn't have been the full 5 tick stop out, and then went. But what I do is when it goes 5 ticks, taking out 1R, or 1/3 of my contracts at 5 ticks, and I'm reducing the stop then to 4 ticks, which was basically 14.12.50, so it would have stopped me out here. But even if I was still having a 5 tick stop out, once it came here, pushed lower, and tried to go lower like that, I would have reduced my stop anyway to 1 tick above this area, which has come back and hit. So overall ends up being a break-even trade. And from there, eventually, it's gone lower. So that's the wrap up for Monday. For a Monday, a day that I thought was going to be little action for myself. In my trading system, there was certainly a lot of trading areas, a lot of areas that I looked at, especially through this area here when we're dealing around this key level. There was quite a lot going on for myself, but I certainly felt like it was in control and taking solid, reasonable areas. Some days there might be a couple of setups, other days like this that there's more. I find probably normally 2-3 trades is what I take in a day, even on a busy day. So just keep it within reason, keep it very well managed, and as long as it's very very well structured in the trading plan, then it doesn't really matter how busy you are. I guess it's better to be busy than have nothing to look at. So back on Tuesday.